Welcome back to the Sustainability Talks podcast. I'm your host, Patrick Sheehan, Managing Partner at ETF Partners. ETF Partners is Europe's oldest and leading venture capital firm focused on backing businesses that deliver what we call sustainability through innovation. Now, last time we spoke with Vikram Gandhi, the professor at Harvard Business School, to discuss investing, risk, reward, and impact. It was actually an enlightening, a great conversation highlighting the positive contributions of venture capital in achieving a sustainable future. So please make sure you listen if you haven't done so already. A link, in fact, is just at the bottom of this page. In today's episode, we'll be speaking with Uli Grabenwarter, the Deputy Director of Equity Investments at the EIF, and Christian Motzfeldt, the former CEO of Vaekstfonden, and exploring how we can achieve a new, greener Europe. So welcome, Uli. Welcome, Christian. Just I'm sure everybody knows you, but I'm going to give you very short introductions anyway. So, Christian, you ran the Danish Growth Fund for 18 years, and I think transformed it. And then after you retired from there, you've been even busier, I think, with things like better energy. And Uli, I guess we go back a long way, but for years and years you've been head of equity investments at the European Investment Fund, on top of which you're passionate about sustainability, about impact. I know I need to say you're speaking in a personal capacity now, and indeed you both are. And to my mind, that means you can say whatever you like. So I'm expecting a bit of excitement and even controversy, and that will be fine. And people might not know, Uli, that you're also a lecturer at the Spanish Business School, AISA, and have published a few interesting papers, such as an unconventional perspective on impact investing. But I'm going to start now by just reading out something. And this is the sort of statement I used to want to make and didn't dare. Right? So this statement is that climate change and environmental degradation are an existential threat to Europe and the world. And to overcome these challenges, Europe needs a new growth strategy that will transform the Union into a modern, resource-efficient and competitive economy. Now, that's kind of what we stand for at ETF, and I know you guys love what this says. That's actually written by the European Commission a year ago. That is the statement of their Green Deal, which is their number one stated strategic priority. It sounds good words. Is this for real?
Well, I think it is, and probably not so much by the expression of a political will, but by a necessity of the challenges that we are facing as a society, and that goes far beyond the European context. I think the approach of having to integrate climate and environmental concerns in our conduct of business and the way how we organize our business has become over the recent years, and certainly since the Paris Agreement in 2015 has become an urgency that we can simply not forgo anymore. And I think the objective that transpires from the announcement of the European Commission at the beginning of the new presidency was nothing else but to recognize that this is going to be a pivotal element in the competitiveness of the European Union in a global context. So I do think it is for real. The ambition is for real. The question of how we are going to get there is a multifaceted challenge that probably not everything in that respect is sorted out, and I think it takes a lot of brains to get that sorted, and not only from the public sector, not only from the European Commission, but from every single stakeholder in our economic system.
Yeah, and Christian, is this knocked off course by the pandemic now then, or what's the impact?
But I do think that all the basic building blocks of the technologies we need to transform the European economy is there. So we have a great chance of actually doing it. So it is for real.
But people have on both sides of the pond started to talk about Build Back Better, which almost suggests to me that it's got a greater sense of urgency. Because of the sense that crises really can happen, and we live in a more fragile world, and we perhaps need to take more care of it. So there's an element of which this is about resilience in an economy as well now. But Uli, would you agree? I mean, you were talking about jobs as much as the environment when you said your words a few moments ago.
Well, I think we need to definitely stop thinking in segments and in silos when we talk about the concept of sustainability. Obviously, when this pandemic broke loose in the beginning of this year and basically forced the entire economy globally into a lockdown, with all the social issues that have been attached to it, unemployment, economic growth, and the like, everybody was asking the question, so this is the new Green Deal. We basically need to reshift our priorities that we just had defined a few months ago. But I think if anything comes out as an awareness of this pandemic crisis that we're going through, it is that we need to start learning in systems, and we need to understand and accept that when we look at societal issues that we need to solve to create a sustainable society, we cannot go by the assumption that the problems and the challenges that we are facing are going to come in the form of a Maslow pyramid, that we can deal first with existence and with health and things like that, and then with possibly food, and then later on with I don't know, education and employment and economic growth, and somewhere at the top of the pyramid, then we're going to talk about self-fulfillment and art and things like that. The challenges that we are facing, possibly 20 or 30 years ago, we could prioritize because we had an almost, by that standard, unlimited time frame to deal with them. And we also probably have understood when we were looking at the Millennium Goals that we even would get an extension for those that we would not manage to achieve in time. This time it's the other way around. I think, first of all, we cannot afford to prioritize because the urgencies are simply as big on one side as on the other side of the spectrum, and we need to deal with them in parallel, and we need to deal with them fast because unlike for the Millennium Goals, we are not going to get extensions on a very few of the very vital SDG goals that we need to achieve by 2030.
Okay, so we need to do a lot of things in parallel, and we have the tools already. I think you said, Christian. Do you agree with what he's saying here?
I do agree that we have to think of competitiveness of our economies in a much broader sense going forward. It's clear from the learning of the pandemic here is that you need to have a very strong health system in place in order to get you smoothly through a pandemic. Countries with a fragile health system, they are in a poor place now.
Right.
So we need just to think in terms of a broader, much broader system, and a tighter fabric of the society to build up a resilience that we need.
And what does that mean in practice? I mean, I did see the Danish government announce a 3.5 billion euro Danish Green Future Fund. So can you just chuck money at it?
Yeah, I mean, it's important to note here that the 3.5 billion euros, it's not a budget line, it's not an expenditure, it's investment. Right. So it's an asset. I had a couple of years ago talks with policymakers in Denmark, and I said to them, hey, why don't we build on the very positive experience we have with the Danish Growth Fund on the Green Deal. The Danish Growth Fund has invested in hundreds of startups and growth companies over the last couple of decades, and succeeded to build new industries and lots of new jobs and better jobs. And on top of all of this, we ran a solid profit. Why don't we do the same with the Green Deal? And then we can actually have a triple whammer: a better climate, and more good jobs, and a positive return on our equity.
No,
So what's not to like? I said, go and do. And they did.
Which, I mean, I have to take my hat off to you. That's impressive, and it's a great amount of money, which should make a big difference. But to be just deliberately a bit cynical, I did a back of the envelope calculation. That's about 600 euros per day, and it seems like a bit of a bargain to fight climate change. And Uli, I know the EU's talking about even bigger numbers in their Green Deal. We're talking about 270 billion or thereabouts. But again, per capita, that's actually not very much. So that makes it. I can't get my head around whether these are big numbers or small numbers. Maybe you could help me out here.
Well, I think I'd say that we need to get rid of one big misunderstanding in that. And the big misunderstanding I see there is that neither the Danish government for the Danes, nor the European Commission or the European Union for every European citizen is going to fix the environment for us. So it is not true that we are going to buy for 600 euros a day or for whatever amount we calculate on a European Union level, that we are going to buy for that amount a fixed and repaired environment for us. Okay. That is not going to happen. What we are talking about here is that we are looking at resources that are going to be invested to create a mentality change in our entire economic system for everybody to contribute to the change that we need to go about. And that is what this capital that is currently ring-fenced in the various investment plans at national and European level is about, that we create this catalyst for systemic change in the mindset of stakeholders in our economy, that we are going about the challenges that we need to tackle in a sustainable way. And I think I'd like to bring that back to the initial question that you were asking, whether we are about to build back the normal that we had before. And I was responding that we need to look at it as a system. We need to look at it as a system because we cannot forget that we are dealing with several challenges at the same time. If we had only the environment to fix, of course, we would throw all our money at solving the environmental issues and then consider that we would be living in the perfect world. Right. But we cannot go by the assumption that we can just deconstruct from one day to the other everything that we are having in terms of economic processes, in terms of production processes and ways how we actually satisfy our consumer needs and whatever we may derive from that, and replace it by something else that is going to emerge from one day to the other. Take, for example, the European car industry. We all know that we have to move to a fully CO2 neutral way of mobility going forward. And that would mean that the entire car industry will have to replace basically its entire production fleet. But you cannot do that from one day to the other. Take the example of today and the demand that there is for hybrid cars and for fully electric cars. Your current waiting time for a new car in that market segment is between 12 and 18 months. Oh. And possibly the car that you would like to have is not even yet in design or in production because we haven't figured out yet how we are going to go about the thing. So I think we are not in a position where we can say that we can throw everything we have overboard from one day to the other and it will step in with a new process. But we need to actually create with the investment facilities that we are bringing to the market now, we need to create that mindset shift that will lead us to a more sustainable way of operating. And given the urgencies that we are facing, we better get that mindset shift pretty fast.
Okay, so we can't just throw money at the problem. There's a whole retooling of society here, and that sounds like a profound change. Christian, are you optimistic about this? Because you were talking about economic growth and success, and Uli's talking about retooling society. Are they compatible?
Yeah, I agree in that as well. But it's important to note that well, of course, it takes a lot more capital to transform our economies into real green economies. The Danish pension funds, they have signaled that they are ready to invest half a trillion euros in the coming years. So there's a lot of capital there ready to invest in infrastructure, for example. But the capital that has been allocated to the Danish Future Fund, the Green Future Fund, is more targeted to the very early stage,
right.
The entrepreneurs, to build up a stronger ecosystem. And our experience is that if we build that in a smart way, it will pull in private capital at a much larger scale. Once the companies that have been granted early stage capital by these initiatives, they need follow-up capital.
So just to make sure I understand this properly, then, if there's a kind of a wall of money waiting to go, and it's not yet being deployed, is that because, why is that? Are they waiting for more innovation? Then is that what you're saying, or are these? Help me understand that in more detail.
They are waiting for more innovation, and they are also the pension funds. They prefer to invest in infrastructure,
right.
and very large tickets indeed, or via equity funds, venture funds. I think one of the first things that we have to put in place is a new green power producing system. And once we have that in place, we get easily or more easily other elements of the new green economy in place. I think it should be possible within the next 10 years to build more or less 100% solar, wind, and battery power systems in most of the European countries, and power produced at a much lower price than what we see now.
That makes a lot of sense to me. But I think if I was summarising, I'd be saying that there's a lot of money that wants to be is willing to go into the area, but it's holding back slightly for more track record or greater certainty of return. Is that kind of the right feeling?
That it is. And we have seen in Denmark. We have seen it with the wind generation, power generation. And it started off with very small companies, and it has grown into a huge business. And pension funds are in fact very eager to invest in offshore wind generation. They are waiting for that to happen also in this solar energy industry.
So Uli, I must challenge you with this. Then it sounds like we have a revolution that needs to happen. We have capital that would be willing, but actually the track record of returns isn't quite there. So people are hanging back. So what's your perspective on this?
I think that is one of the main tasks of public capital in the market, is that we actually use our funds to demonstrate that this new economy, this new era of our business environment is institutionally investable. And at the level of EIF, we are not backing off from this challenge, because we have done the same thing with the venture capital space, which we have picked up in the worst crisis in 2000, when everything has been bombed into pieces by the dot-com crisis.
Right.
And we've been building back over the decades. Last decade and a half, we've been building back a venture capital market in Europe that today, in terms of return expectations at least, is totally at par with the US market.
Right.
And I think the same challenge we are facing in the green space. But I think we're going to be helped by the by the business behavior and the impact of the current environment on the profitability of businesses as such as well. If you look at the take the evolution over the last 10, 12 months and the stock market crash that we had, and the evolution afterwards, the market segments that have been recovering the fastest from it have been the most innovative ones.
Exactly.
In the market, and not only in the technology space, but also those market segments and those type of companies that have been addressing their business markets, their business models with the most sustainability conscious way. Okay. I think the challenge that we are facing is that when it comes to defining business models going forward, we need to make sure that we are leveraging on the innovative power that we have available today to actually anticipate the type of systemic shocks and crises that we have in the future. The pandemic that we are just going through is just one expression of that. Yeah, exactly. In the environmental space, we are facing the same type of challenges. And if you take just the example of how we are dealing with the COVID crisis and how we go about tackling those circumstances, it is very similar to how we have been dealing with the plague 700 years ago. And which we simply cannot afford being that our blueprint for dealing with this type of crisis. And the same anticipative approach we need to have to any systemic threat that we are facing, be it on the environmental side, be it on the health side, be it on the social divide side. We need to find solutions that are more anticipative than that. Is
capitalism up to the job? Are we really right to be thinking about rates of return when we're talking about such a crisis? Should we not be able somehow to be more radical? Christian, what's your view on that?
Well, I think there is still lots of power in capitalism. We see this time that the technology market has not suffered a setback as we saw in during the financial crisis and back in 2000, 2001. The whole ecosystem is simply a lot stronger. The investors are more experienced. We have seen it before. The market didn't dry out. It's still there, and we have lots of very, very skilled entrepreneurs. They have gained experience from the tech sector, and they can readily take it into this sector. So I do believe that there's a lot of power in capitalism still.
Okay, and Uli, I'm expecting you to say the same thing somehow.
Actually, no. Actually, no. I actually do agree that capitalism has a great deal of shortcomings when it comes to the challenges that we are facing. But on the other side, I'm also realistic. And I don't think that we have got the time to educate the entire financial market system to a system of philanthropists. That's not going to happen, at least not in the time frame that we have got available.
Right. Not in 10 years, right?
To solve the problems. And that leads me to the conclusion that if we want to give us a realistic chance of sorting that out, we need to work with the system and make the system more aware of what is at stake. And one part of that comes from the integration of externalities in the regulatory system, so that people and stakeholders actually pay for the consumption of common goods. And that there's a lot of work going on in that space, from regulatory measures to integrate CO2 footprint and things like that in production chains and what have you, to the creation of transparency through impact-weighted accountings and things like that. That is a project that is on the way as well. And on the other side, we should not forget about the most important power in the market system that we currently have, which is consumer behavior. And that has changed massively over the last 2 decades. And I would even go that far that I would say that the competitiveness of any company going forward will lie in its ability to monetize societal value. And if you approach capitalism from that perspective, I think we can maintain the focus on value creation for a capitalistic structure, but it will actually have to take into account the stakeholder group that we may have thought so far that you can neglect it.
Okay,
it's no longer the case.
I think you're saying if the kids go green, then and you want to sell to them, you better go green. Is it?
There you go.
Very good.
But isn't that also part of the capitalistic system? Consumer behavior is company behavior. I see lots of CEOs now expressing very clear strategies on the Green Deal, and they better do, because investors, they express very clear preferences for green investments. So I still believe that that capitalism is a good servant, but it's not a good master. Government should take a lead, for example, in setting up investment units, as the Danish government has done, and after having built a stronger economy, they should redistribute some of the income to build a resilient society. But this is part of the capitalistic system as well.
And Christian, I would much prefer to disagree with you. It would be more fun, but I fundamentally do agree. But then it's how you manage transition, as Uli said, right? Because there's a lot of pain in transition, and surely that's the rate. Managing the pain is the rate limiting step, isn't it? There's enough willingness to change if we can manage the transition costs, surely.
Exactly. Yeah.
Okay. So, and is Europe still in the lead then? Clearly, I'm biased. I'm in Europe. I think it's in the lead. What's your perspective, Christian? Then Uli.
Well, it has a pole position, so in a way it's still in the lead, but it will have to accelerate from here to stay in the lead. We have the technology, we have the essential building blocks. We have a readiness on part of the consumers, the companies, and the investors. So if the Commission does what it says, and the governments of each individual country do the same, I think we can stay ahead.
Okay, Uli, is your perspective?
Yeah, I think the main advantage that I see for Europe in this entire evolution is that in Europe we probably have the most sustainability-affine culture and population. I think there is no other geography on this planet that has intrinsically a bigger awareness of the link between personal well-being and the protection of the environment, and that translates into consumer behavior, that translates into a much more critical approach of citizens also in the election processes with respect to agendas that put at risk our environment or not. And if you look at the surge of environmentally driven parties in the election processes across Europe over the last couple of years, it is a clear trend that actually translates also in the political decision-making process. And I think that is it is this consciousness and this awareness of the European population that gives a kickstart in terms of consumer behavior, but also gives an affinity in where resources are directed to with respect to innovation and technologies that emerge that actually are vital for taking on those challenges. So from that perspective, I believe we have got a good basis to work from, but having a population that is fond of these topics is not going to be good enough. We also need to curate this environment, and we need to direct and guide it to genuine impact rather than just activity that is there at scale. The big difference that I see today is that we need to link whatever action that we take to concrete outcomes where we want to be, because otherwise we are going to spend a lot of money on feeling better than the others, but it won't save our planet.
Right. So we should be feeling a bit better, but we shouldn't be complacent, I think you're saying. And you're kind of introducing the topic of green finance to some degree, I think. If all this money is appearing in Europe for a purpose, and we start to have this thing called green finance, is that actually helpful? Uli, is this just a distraction, or?
I think it is helpful, but for me, money is nothing else but a means. Money as such doesn't change our environment. Money as such is not making it better or worse. It's the question of how do we direct it and for what purpose are we directing it. And let me maybe reply to your question with one challenge that I see in using that money. We have over the last few years beating the drums quite massively, saying that we've been doing so much more in Europe in terms of mobilizing capital for environment and sustainability and what have you. But most of the money that actually we directed to profitable projects that have been in new fancy fields of of solar power and things like that, replacing fossil industries and the like, and that's all very good. But we also need to make ourselves aware that 80% of what we need to sort out in terms of climate challenges is linked to assets that are already in the market, that actually need to be converted towards a more sustainable environment rather than being rebuilt. We won't have the time to rebuild everything because this is a stock that has been grown over several decades, and we are not going to replace that in 24 months. So we need to be actually much more conscious about how we use that wall of money that is out there in the market, and more importantly, how can we direct it to the risk and return profiles that are not naturally associated with the assets that we need to back, and how we can use in that context the catalytic capital of the public sector to make that happen.
Because I guess we're in danger otherwise of just relabeling a flow of money what's happening anyway, and that's
that would be actually the right
change. Yeah. So Christian, do we need to change finance to make it green then, or do we need a better taxonomy or language to express how we think about impact? What's your view?
No, basically, I think we can go about the same analytical tools and framework as we have done previously. Of course, it's conducive to have a new consumer behavior, and in a new company behavior, and a new kind of investor behavior that they would prefer to have this triple bottom line focus. Once this is in place, I think we can apply the same instruments, and again, I think we have all the basic building blocks for growing new green and sustainable businesses. Once we start with the energy system, and we get much lower energy prices based on solar and wind, we can take home a production from East Asia. We can build more local production, which is also more sustainable, shorter supply chains, which is also very important for building a more resilient society. So, I mean, everything calls for us to invest heavily in the coming years in infrastructure, and also in entrepreneurs applying all the building blocks of the existing technologies on scaling up new businesses with the green transition.
Okay, so I'm going to pause for a second and reflect on what's been said, and a lot of good things have been said. But if I'm just deliberately cynical to the point of slightly rude for the moment, just as it's kind of more fun to be challenging, a lot of this sounds like, well, when we've had a bit more innovation, we can start to deploy capital. It's a systemic problem. No one thing makes a difference. Maybe you can give me examples of what European institutions are doing today that's making a difference. And Uli, I'm going to take the liberty of putting you on the spot, speaking personally, of course. to what should we look for and say, that's what they're doing today that's making a difference? Because we haven't got much time, really, have we?
Well, I think what we are doing in response to it, and actually I'm in the midst with my colleagues at EIF in the midst of the strategy debate on how we are going to go about the programming period of 2021 to 2027. And this is not about trashing out one or the other investment window for supporting green economy, things like that. We are basically in the process of discussing how can we actually shift our entire investment activity to be Paris aligned.
Okay, so this is profound. Yeah.
This is basically, as you said, if we want to have the markets go along with the perception that this is possible, we need to prove it ourselves in the first place, and that is what we are looking at as we speak. We are going to take on from January next year the infrastructure investment activities of the EIB group. That's part of a reorganization that has taken place this year in the EIB group. And the first decision that we've taken with respect to that the infrastructure investment activities that we are going to conduct on behalf of the EIB group are going to be directed 100% to environmental sustainability.
Oh, okay. I'm impressed now. I take it back.
Yeah. So I think it's a question of I wouldn't say you don't have to take anything back, because the reluctance that you express, it's a natural reaction. And as I said before, at the same time where we need to walk towards very ambitious environmental goals, we cannot leave aside that we need to take a population of more than 300 million people along with us.
Right.
This is not going to work if the agenda of the Green Deal of the European Union is going to end up with 50% of the people in Europe being unemployed.
Right.
So we need to actually create this intersection between the innovation that we are going for and this innovation creating value creation potential also economically in a way that the prosperity of Europe can be built on that in the future.
Okay, well, it does sound like you're really thinking extremely seriously about it, so I am impressed by that. Christian, are national governments treating things as profoundly and as seriously?
Probably not enough, I would say. I still would like our government to do a lot more. I think we can do, for example, a lot more in farming, and the Commission can do more also in farming. We have lots of lowland and peatland with a very high carbon content that needs to be taken out of production. And the obvious way to do it is actually just to build solar power on this land, and you can have a triple whammy as well there. So we have lots of powerful tools at hand, and one is the way farming subsidies are handed out.
Right.
If we just do that in a greener way, it will have an effect, because farmers will react swiftly.
Yeah. No, to survive as a farmer, you have to be an acute businessman these days, I think.
Exactly.
And Christian, you've mentioned a revolution in energy in passing. You're touching on a revolution in farming. Are these the two main revolutions that you see, or?
Yeah, certainly, and they are probably going to be more profound revolutions than the one we have seen in communication technologies. We are on the cusp of this green energy revolution, and also in farming, as prices of precision farming comes down rapidly, and the extraction of green protein and fermentation, precision fermentation. In 10 years' time, or maybe even in 5 years' time, we don't need the cow any longer, and the cow will have to go the same way as the horse. It will be a pit in 10 to 15 years' time.
So now I think I'm speaking to two revolutionaries. That I think you both see pretty large change across a range of industries in a relatively short period of time. So I want to ask you each, and Uli, I'll start with you again. What success looks like to you then, if you're looking forward 5 or 10 years? Give us the vision.
I think a success for me would be independently of the individual objectives. And Christian has been mentioning a few sectors that obviously are very vital, and there are others on top of it linked to mobility and the like. But for me, I think the most important success factor that I see, and that's something that we need to achieve even in the short term. I would say in 2 to 3 years we need to be there. Is that we measure our own engagement in this, not with the amount of money that we've been pouring into the markets, but we measure it against what we have changed in terms of economic behavior.
And we being the institution of the EIF, or you and me, or
the institution like EIF, but also any organization that brags out there in the market with being active for climate change and sustainability and the like, needs to actually be accountable for what has changed because of this intervention, and not because of how much has been invested. Because we can easily invest everything we have in any activity that does, in quote marks, no harm. But we are simply in a situation where diluting what is being done as harm to our environment is not enough anymore to secure our sustainability.
Okay.
We actually need to get beyond the delusion of the bad with something good that we are doing, to changing the patterns that actually produce a negative impact on our society.
Okay. Very good, thank you. And Christian, you've had a bit of time to think about this one now. I've seen you making notes there.
Yeah, I still believe it's important to have a massive deployment of capital. So in the end, we need capital makes the world go round and change the world. So success is to make sure that we get full benefits of all the opportunities that are actually outside of our windows, and build a new and stronger ecosystem of entrepreneurs who can readily put together all the basic elements and building blocks of the new industries and scale it up. So I'd like to see a shitload of money being invested into this Green Deal, and I'd like to see lots of stranded black assets out there, and losses of those who have invested in the fossil fuel business in these years without thinking of the climate.
Very good. We're reaching the end of our time. I'm going to rudely give myself the last word to say that actually I really enjoyed this. I think you're both offering a real call to people to personal action, to personal as well as institutional accountability. Christian on the need to act and actually for institutions to deploy real money. But I think you're both optimists, and I am too. So it's optimists who change the world. So on that note, I do want to thank you. I know you're both incredibly busy, but this has been great. Thanks for listening to this episode of the Sustainability Talks podcast. To find out more or join as a guest, head over to the ETF Partners website at www.etfpartners.capital. You can also connect with us on LinkedIn or follow us on Medium at ETF Partners. So until next time, thanks for listening.